Good morning, everyone, and welcome to the weekend update here on March 16th with Steve Gans as we take a look at the market action over the past week, as it was a pretty volatile market here last week. So we had some fairly significant drops as we continued in this particular down move right here. And that accelerated as we went through the week. It continued to get a little bit worse. Our volume was pretty high here earlier on. The volume did start to taper off going into Thursday. We had a little bit lower volume on Thursday here, as we can see right down in this area here. And then on Friday, we did get a sizable bounce, and I do use AI to look at market trends, things like that. I went out and I queried AI, which I will do sometimes about market action, and I asked it, on Fridays after sell-offs, what tends to happen? And there is a tendency to have some bounces. Now, I wasn't expecting this big of a bounce that we got right there, but I was expecting a bit of a bounce. Now, why does that happen? I think the most common reason that happens, particularly when you have a big down move, is short covering. All the people that are short positions in the market, they're writing those down. They don't really want to carry those through the weekend. They can go ahead and lock in some significant short profits, so they go and they start to cover. Then when some of them start to cover, things start to rally. Then when things start to rally, other short people take a look and say, ooh, man, my shorts are getting hit. I need to cover too. And it perpetuates a little bit of a cycle, if you will. Now, the key here is that I had called out last week that if we continued to break down, that this support and resistance line right there might be a potential line in the sand, and it was. So that is where we finally ended up bouncing. Now, we broke the 200-day moving average here a week or so ago. That's not a good thing. We rallied back, but look where we rallied to. We just rallied back. We didn't break the highs that we had earlier in the week. Now, those highs were on days that we sold off, but we didn't get above those. So to me, that's still a bit of a red flag. It doesn't look like we're, at least right now, it doesn't look like we're going to rally up a lot higher. In fact, my expectation is that we might end up actually moving back down a little bit, possibly to this low. If we double checked that prior low and then bounced off there, I'd feel a little better about it. But right now, my expectation is possibly coming a little lower, chopping sideways, and then maybe a little lower yet. I think that's probably a little bit higher probability scenario right at this moment. Now, time will tell. We'll have to see how that pans out. Let's come in and take a look here at the SPY is going to be the same as SPX. So we already evaluated that. Let's look at VIX now, and let's take a look at VIX. So VIX did hit this early high where it came up and it pretty much just peaked off of that high right there, hit the same high point or very close to the same high point. And then it did fall off. So that is a little bit of a good positive sign that maybe the carnage is over. Again, I'm not sure I'm buying that. Want to take a look at the Qs. So Qs, very similar story here. The Qs in my mind actually broke a little bit deeper than what I was expecting. I was expecting the Qs to probably stall out around in that area. Again, they did break a little bit deeper, and there's a case to be made that there could be a trend line right along in that area, working off that low, this high, etc. So that's a possibility. But again, I feel about the Qs the way I feel about the SPY itself. We didn't come back here and get over the highs of earlier in the week. So that kind of leads me to believe that maybe a little more down in the Qs. And then we'll take a look at the IWM, which equates, of course, to the Russell. The Russell kind of really took it hard. It really got slammed in this whole thing. And it is now down, approaching broke that low there, is about right on it. It's definitely looking a little bit weaker. Its down moves had significant volume associated with them. And then let's look at the RVX. I didn't look at the QQQ volatility, but it's going to be very similar. All of these are going to pretty much play the same way right now in these big sell-offs. Again, the Russell volatility has pulled back some amount, but again, still that's still a fairly high reading, which is making me think that we're still looking at some more potential downside here. Again, we'll see how early week plays out. There's some Fed announcement, I think, coming up on Tuesday. And I say announcement, they're basically going to talk about their meeting that they had a month ago, but that's the way the Fed stuff goes. They have made their decision a month ago, but it's all of a sudden going to rattle the market this week for some reason. But anyhow, there's a few things coming out, a few other reports coming out this week that I think are going to be important. And of course, anything that comes out from a standpoint of the government and our leaders is also going to probably have some impact here as well. So we'll have to see how all of that plays out.